All right. Hello, everybody. It is Wednesday, so we're coming to you all live from Investing Education Academy. A lot has been happening in the market if you've been kind of tracking things. Mainly, we're going back to what we talked about last week, Robinhood. For those of you all who have been looking at getting more information from Investing Education Academy, but you're trying to figure out how to do it, you can go to Facebook and search Investing Education Academy. We should pop up both our page and our group. Feel free to join our Facebook group. It's absolutely free, a lot of good content in there. And we will be adding our stock picks from today's live inside of the Facebook group. If you're wondering, how do I see some of the stocks you all have been picking? And for those of you all who want the running list and want to know some of the insider information that we've been talking about as it relates to the market, cryptocurrency, life insurance, options, all things investing really, you can go to the Investing Education Academy, not Facebook group, but our membership site, and that's IEAnow.com. Again, that's IEAnow.com. And for those of you all who don't know, we've been celebrating our 1 year anniversary. You can see Leon's shirt. If you listen to the podcast, trust me, it's been 1 year. And we're running specials. It's gonna stop August 10th at midnight. Again, August 10th at midnight, that's going to be done. I'm pretty sure it is going to be the last time Leon and I discount membership as much as it's discounted right now. In which case, if you're curious about that, you can go to IEAnow.com and you will see the membership discounts. As soon as you land on the page, you'll see them. And I promise you, this will probably be the last time we have discounts that are that extensive. So Leon can tell you why we chose this topic. As always, I'm going to do a little housekeeping.
Yeah, so the topic today is the Robinhood IPO revisited. And the reason is because if anybody's been tracking it, this thing has essentially become a meme stock. And Brent and I were just talking before we came on. So last week we just talked about, the IPO coming. It's one of the biggest, most anticipated for the year. And I poo-pooed it, right? I was like, I'm not touching it. I'm not. Even now that it's up huge the last week, I'm still not a fan of it just because, again, I'm a fundamental investor. I go after stocks that have growing fundamentals, profits, sales, things like that. Robinhood currently is not profitable. However, and I've kind of had my mind changed a little bit on Robinhood. So as we said, I think last week, coming into this year, Robinhood was actually profitable. And the reason they're not profitable right now is because of the whole meme stock thing that happened in January, February of this year, where they had to go out and raise $3 billion. Their site was inactive for quite a while. They had a lot of regulatory things they had to deal with. So they went from profitable to not profitable. So I kind of rethought that and was thinking, okay, before all this crazy thing that happened was really an anomaly in the beginning of the year, they were a profitable company, right? Which is one thing you look for for IPOs. But another reason I'm not a big fan of them, as I said last time, is because their revenue split is 70% coming from what's called payment for order flow, which is where market makers pay them for Robinhood to send them our orders. And that's under regulatory review by the SEC. It may go away, it may not, it may be reduced, it may be curtailed, we don't know. So there are a lot of ifs with Robinhood. But in talking to people over this last week, kind of have my mind changed because Robinhood has, for people that don't know, Robinhood has 22.5 million subscribers.
Whoa. I gotta say, whoa.
Sorry.
I didn't convince you with my argument that they had the biggest number of subscribers?
No, you didn't. but I'm going back to your point now. Your point was well taken, which I didn't take at the time. But let me tell you why that's now valid to me, in my opinion. Is that they're 22, not subscribers, they're 22 million users. And like what people have been kind of convincing me is that if they can turn, so what Robinhood is trying to do, they're trying to become like a Fidelity, right? Right now they already have margin accounts where people borrow money from them to buy stocks. And there's interest paid on that, right? So that's one avenue of revenue for them. Of course, they have crypto, which they're going to be growing hugely over the next couple of years. And then, of course, they have payment for order flow. So what people kind of convinced me of is that if Robinhood can execute on getting their crypto business up and running to compete with Coinbase and move into money management, well, not money management, basically where banking services, where money that's sitting in their people's accounts are then swept into interest bearing accounts, where Robinhood then makes money off that. If they can improve that, as well as keep their payment for order flow going, they could make a lot of money like quickly. But it's predicated on them executing on those goals. So, and remember, prior to this, the whole meme stock thing in January, February, they were profitable, right? So there is a case to be made for Robinhood as an investment. I didn't really see it last week. I've been kind of convinced this week that maybe take a flyer on it because of the things they're actually working on. And again, those 22.5 million users that they can then tap for all these different services. So, I'm kind of open to it now. Wish I had been open to it last week, because we're going to discuss in a minute what's happened to Robinhood over the last week. And it's become meme-like stock-ish. So anybody who's in, congrats to you. And anybody who definitely got in it went public last Thursday. If you got in the closing business Thursday right before they closed, man, you made a killing. So when you get a check, you pull up the slide.
Yeah, I can definitely do that. Now, I want to say it's probably not likely they're going to pull off all things smoothly when they start launching. I anticipate their wallet not coming across. When they build out their wallet, I don't think it's just going to all of a sudden be the highest utilized wallet. But I will say this. Going back to what we talked about, which I've always felt, if they have this much access to people, period. And this is the thing. I don't care really what the company is. And this is just true of business. And I'll argue this with anybody, right? If you have access to more people than someone else, and the likelihood of you converting, let's say, half of those people on any one product is high, the only thing you have to do is introduce two products. I mean, it could be $1, and you introduce two products, and over the course of early adopters, and then as Robinhood has shown it can do, disrupt the model. I mean, disrupt the industry, right? I mean, they came in toting this whole no commission. Everybody laughed at them. Like, what gag? Like, what are they trying to do? Nobody's gonna do that. And then who rushed to them? Millennials. Like, millennials rushed, like, I'm not paying a commission. And it was really a lot of people who weren't sophisticated investors initially. And so, now looking at it, especially with cryptocurrency being so new, this I'll kind of say the attitude of investors right now, especially in cryptocurrency, they match Robinhood's culture. And I've always, this one thing I've hated about Robinhood forever, and you know what it is, right?
Yeah, the 800 number.
They don't have 1-800 number,
or basically lack of a phone number that you can call for support. Yes,
it's been proven that on more than one occasion that lack of engagement has caused people to lose money. Either if it's a hiccup in their system, something happened in the market, somebody was just confused about their account. But I had a conversation with somebody who was 23 last week, and it's just relevant to this conversation. And I was like, they were asking me, what account should they use? And then they only have Robinhood right now. And I was like, oh, well, I really like to have a bigger account, something I can get in touch with somebody. And they really were like, why? And I was like, if you're putting your money with an investment, a brokerage house, you want to at least be able to get them on the phone in case something's wrong. And they were like, I prefer to email them. They literally did not want to talk to them. And I never thought that there would be a consumer anywhere. This is completely just me being honest. I never thought there would be a consumer anywhere for any reason to whom wouldn't want to talk to somebody who was holding their money. And I was proven wrong. And that made me think, like, wow, maybe they're really onto something with this. Like, they're saving money and cost, and people seem to actually want it.
I mean, look at it. They grew to 22 million customers they only beefed up their support the last like 3 or 4 months before they went public, because they knew they were going public. Prior to that, they grew to 22-some million customers with essentially no support. So that shows these millennials, yeah. Dude, whoever that was you talked to, just reinforced basically kind of what's been going on, that they're kind of cool with. Honestly, I'm that way too. I don't like to talk to people. I much prefer to email or DM or instant message. But when it comes to my money, I definitely want to get somebody on the phone. So I'm agreeing with you. I agree with you that when it comes to finances, I want to talk to somebody directly. But any other area of my life, I much prefer to just email or text.
This person preferred not to talk to him.
Yeah, that to me, that's a little weird when it comes to money. But hey, again, Robinhood proved it. So so we shouldn't be too surprised because they've grown to 22 million people with no support, really no customer support. So
one thing too, some of you all may be wondering, after we go through this, some of you all are probably thinking like, should we still invest in them? Shouldn't we? And we'll give you our thoughts. I mean, similar to even when the IPO came out, you gotta kind of hear the two stances and decide what's right for you. And it's gonna be interesting. We'll go through this. Stick around. Share this with your friends. Definitely you can find these videos on YouTube as well. But stick around, and we'll tell you if we think it's worth still investing in or not.
Yeah. So last Thursday, Robinhood came public, and so what we have up here is just a card showing the how Robinhood's done since it came public, right? So last Thursday, Robinhood came public. Most anticipated. Everyone was a lot to do about it. It really kind of the red flag started coming up when so the range of the stock was going to be between $38 and $42. And typically, not as we all know, but typically what happens is during the quote unquote discovery phase, the market makers bid up the price, doubles, triples, whatever. Robinhood didn't do that. Robinhood's high end was 42. You think it may go to $60, $70. It went from 42 down to 38. So it didn't drop, but it stayed at the low end of the range. So it came out at 38, which was a red flag. Then the rest of the day, it dropped 8.4%. So day one, day of the IPO, stock dropped 8.4%, which nobody saw coming.
Yeah, nobody saw that coming.
Nobody saw. Yeah,
it was it was the second most anticipated. It was one of the top 3 most anticipated IPOs this decade. And
yeah, I mean, the top 2 for really were Coinbase and Robinhood.
I'm included with Facebook though. I'm
throwing. You mean like the last decade? Okay. Yeah. Okay. Then day 2, last Friday, the stock was up 1%. Right. So it recovered a little bit, but still way below its IPO price of 38. Then day 3, which was Monday, it was up 7%. Right. So a lot of people were like, okay, maybe it's getting its footing. Maybe it's a false breakout. Who knows? On day 4, which is yesterday, it was up 27%. Now, this is when people really started to wake up, okay, maybe something's going on here, something that we missed. A lot of people, they think a lot of people actually jumped in based on that 27% pop. And then today, day 5, it was up 50.4% today. Just today alone, it was up 50%. So if you got it yesterday, you made almost double. You made half of your money back, or almost doubled your money. So you made 50% of your money in one day. So now you think about back to last Thursday when it dropped 8.4%. Had you bought in, so our last bullet says anyone who bought near the close on the day of the IPO is now up over 100% in just 5 days. Because it closed at $34 and change. And today it closed about $70. So in 5 days, if you had the cojones or the wherewithal to buy something that's down 8.4% on its IPO debut, you're now over 100% because it went from 34 then today closed at about 70. I think it may have been up even more after hours. So again, nobody saw this coming. A lot of people thought what happened yesterday and today, being up 27% and 50% yesterday and today, would have happened on the IPO day, which would happen last Thursday, which is the exact opposite what happened. It actually dropped 8.4%. So yeah, I mean, this is that. So now the question, the big discussion today has been, is Robinhood the new meme stock, right? And like Brent and I were talking before we went on, it kind of makes sense. And I don't know why I didn't think about this before. It makes sense that the company that essentially invented meme stocks is now becoming a meme stock itself. But crazy thing is that,
hey Leon, real quick,
yeah,
you might want to define that.
What meme stock? So a meme stock is replace meme M-E-M-E with the word momentum. It's really all it is. Stocks that just have crazy amounts of momentum behind them for whatever reason, be it news, be it earnings, be it nothing, be it just people on Wall Street Bets, which is the big online community on Reddit that is credited with kind of pushing these stocks higher. If they talked about it, that may have pushed it up. So when you hear the term meme stock, it really means a stock that's going up dramatically for no real apparent reason. But the crazy thing is that during January and February, Robinhood actually had to halt trading in meme stocks because they went crazy, right? They were up 20, 30, 40, 50, 60% per day. The volatility was insane. So they had to put on what's called circuit breakers within its own platform. The question now is, would Robinhood actually have to halt its own stock on its platform from trading if it becomes this meme stock and starts going up 30, 40, 60%, 50% per day, into perpetuity? That'd be really odd that a company would have to hold its own stock from trading on its own platform. So, this is one of the interesting things to watch with Robinhood going forward. If it's actually become a quote unquote meme stock, will this kind of go away? Will it kind of settle down? It had really meme stock behavior today because at one point it was up 50%. I think it was up maybe 60%. Then it dropped by 30%, and then it went back up to about 50%. So it was a crazy volatile day, and it's exhibiting meme stock behavior. But we got to see in the future if that continues.
Yeah, and the one thing you got to always wonder: do the short sellers come out of the woodworks thinking, "Oh, it can't last forever," and then end up in a short squeeze because it keeps climbing? So this would be a really interesting one. This is actually one of those things that's just fun to watch. Whether you are an investor or not, just watching the behavior of IPOs like this and looking at the characteristics of the company, these are things and these are moments that help you understand how the market works and how the market breaks barriers all the time, or breaks through what is traditional IPO introductions to the world. You think the behavior of what it's going to do, and the market just throws a curveball. And these things don't happen often. Honestly, I'm still not a fan of IPOs, so this doesn't change my thought on IPOs at all. But it is interesting to see the behavior of this. I've been a fan of Robinhood since the beginning, though. I will say that, but I'm not a fan of IPOs. And just seeing the variation of things that can happen in the market, I love this stuff. And I think if you're an investor and you're watching this, pay close attention, because when you see it again in the future, you can look back and go, okay, I remember this. This is how you start to understand patterns and where to position yourself, is actually being in the market, having conversations like these. So, the big question is, Leon, would you buy Robinhood right
now? Yeah, I would. Even though it's up 50%, of course, with no.
Just 1 week.
Say what?
In just 1 week.
Yeah, after what happened today, what's happened last week, and then kind of thinking through the 22 million people, all the opportunities they have to make money. Yeah, but it would be a very, very small position. Nothing. I do say, Brent, curious money. It would just be grant money that I can lose and not even think about it. But I will say real quick, earlier I mentioned Wall Street Bets, and people don't know what Wall Street Bets is or are. Google them. They become a very, very powerful movement. They are credited with they're credited with pushing,
AMC.
They're credited with powering these meme stocks. GameStop, GME, AMC, now even Robinhood. So what happened was, the reason I'm bringing this up is because for those who may not know, we talked about this earlier inside the platform, that AMD went to an all-time high today. And inside IA, we've been pounding the table on semiconductor stocks since we started this year and a half ago. And those stocks are now, are gangbuster. But they don't typically move in meme stock type fashion, just straight up. But over the last week or two, one of the top stocks mentioned inside Wall Street Bets, which is a forum on Reddit, has been AMD. And if you look at a chart of AMD the last 2 weeks, it's literally vertical like this. Like, it has gone straight up. And so the movement in AMD, a lot of it has been credited, at least the velocity of the movement in AMD, a lot of it has been credited to the Wall Street Bets crew or Reddit forum, because they've been talking about it, and usually when they talk about things, they buy huge option positions, which then helps push stocks higher. So I will say, again, always do your own research, but following or just being plugged into the Wall Street Bets community, there's actually a company out here now called Thinkum, I believe. And one of its primary functions is to follow mentions on Wall Street Bets. It then sells that information to Wall Street, because Wall Street wants to know now, hey, what is the quote unquote little guy doing? What are they doing inside this Wall Street Bets community that they're getting, these, like today, a 50% return in Robinhood, right? Wall Street wants some of that too.
And real
So
quick,
just say all that to just look out for Wall Street bets. Do your research into it though.
yeah, do your research and be warned. Wall Street Bets, they put out a lot of information about a lot of stocks.
Yes.
So understand they have far more failures than they do
Far
success.
more. Far
Like,
more. Yeah. Wait, yes.
Yeah, so we have to say that.
Yes,
So
yeah.
we don't want you all thinking, oh, okay, well, let me go here because they're who we should follow. Just like us or anybody else, I don't care who you're listening to. Do your research, make sure it makes sense for you, and don't just throw your life savings at anything just because it was on the internet, because you heard it with a group. Pay attention what it is, invest wisely, have a long-term outlook. I think that's the best thing to do. Those of you all who want to be day traders, more power to you, good luck. But it's similar to Wall Street Bets. And the founder of Wall Street Bets will tell you, they lose far more often than they win. But, of late, really with the AMC kickoff, they hit a chord, they hit a nerve, and they start winning pretty big. But it was not like that for years for them.
Yeah, a lot of people on there have lost money. A lot of people on there made money, of course, too.
Yeah.
But I mean, Wall Street Bets could just be another data point. Like I check Wall Street Bets every blue here and there just to see, what's going on. What are they talking about? What are maybe some stocks that I've never heard of that they're discussing? But I never, ever invest in anything based strictly on Wall Street Bets. It's just another data point into my analysis. But it is out there. It is information that's available to you. It's free. Just like I say, just Google Wall Street Bets. But like I would say, do your own research and never follow anybody blindly.
Yeah. And so for everybody watching, Leon, anything else?
No, that was it. Just to recap, I am now a somewhat believer in Robinhood. I'm gonna throw some curious money at it. Nothing big, but I've been convinced over the last week that it could potentially do well. But like Brent said, I'm not a fan of IPOs. We did a live or podcast or sometime last year where we showed data that shows that IPOs over the long term are bad investments. Generally, some will work out, but generally over time they're bad investments for I believe like the first 3 to 5 years before they actually really break out. So yeah, I'm not a fan of IPOs in general, but this one I will throw a little curious money at.
Yeah, and the question for myself is, would I invest in Robinhood? I've been a fan since the beginning, so this doesn't really change anything for me. I'm still looking at the long term when they actually become successful launching a cryptocurrency platform. And if they get to a place where they're doing managed money, that's even better. But hopefully, if Robinhood's listening to this, somebody send this to an executive, please get a win 100 number for us people who are like, you know what? If you have my money, I should at least have your telephone number. So that is my stance is going to be.
I'm with you on that. I'm all about the 1-800 number for when it comes to money. Yeah.
No, so I mean, and it's just a quick story. I knew a client I knew somebody who was moving in my days of being a financial advisor. Somebody had decided they wanted to put some money with Robinhood, and no, it was actually E-Trade, and they lost $65,000. $65,000, and nobody could find it. Finally, I was like, "Have you called the 1-800 number?" And the person was like, "Oh no, I didn't even think about that." They called the 1-800 number. They put in a ticket to do research. They called back within a day, and the same person who they called into called back. They found that it was basically lost in between transit of the mail being delivered, and it got sent back to the mail. It was just sitting in a room at the post office, and they were able to track it because a person, answered the phone and said, "I'll take ownership of this," and they went and took ownership and called back, found the money, and it was in the account within 3 days. So, I mean, it's just, if I would just send an email to random people who I didn't know if they did or didn't have a vested interest in doing the research, it would bother me. I'm not saying they wouldn't do it. I'm not saying Robinhood wouldn't do it, and being very clear. I'm just saying if I couldn't hear in their voice that they were willing to get in there, it would definitely do something to me. So I would still buy Robinhood. I mean, I'll be in it for at least 5 years. So this right here wouldn't mean anything to me, to be honest with you. And nor would I feel regret. So if you all are out there thinking, "Oh, I missed the boat," it probably still will be volatile. Like, don't think, "Oh, it's 100% since, I saw this Investing Education Academy live or listen to this podcast." It clearly is going to continue that way. No, we're not saying that. We are simply saying this is where it is as of today, August the 4th, 2021. And I am personally saying it's probably still going to be a very volatile stock for the next 2-3 months. And but I don't think it's going to have a negative impact in the long run. So
Yeah, no, I mean, the question, like we say, always ask yourself, if you're buying a stock today, do you believe it will be higher 3 to 5 years from now? If you do, it's a buy. If you don't, then it's not a buy. And Robinhood, yes, I believe will be higher 3 to 5 years from now. Therefore, I would throw some curious money at it.
yep, everybody, if you are interested in joining Investing Education Academy, we are growing and we're happy to have you join the community. You can search Investing Education Academy on Facebook and join our free Facebook group. You can also, if you want to get the true inside and learn a little bit more about Investing Education Academy, you can come on to our IEAnow.com. That's our membership platform. Join. This coming Saturday, we have one of the sessions we call Ask an Expert. These are hugely important. We hope that if you are interested, you can show up for this. This Saturday, we'll either be talking to an expert on estate planning or an expert in life insurance. It's simply going to be an expert in estate planning or an expert in life insurance. Many of these people that we have on the Ask an Expert episode, their prices can be anywhere north of $300 an hour. So members only can show up, IEA members only can show up, ask them almost any question that they're able to answer for an hour. You have an hour. If you're an IEA member, you should know this. You have an hour this Saturday from 6 to 7 p.m. to talk to either an estate planning attorney or a life insurance expert and ask any of the questions you've been just kind of wondering, pondering, scared to ask, didn't trust somebody to ask, whatever the reason. This is your moment, and it's part of your membership. So there's no additional cost. Please take advantage of it. If you're thinking, you know what, I've always wanted to talk to a estate planning attorney, I know I need life insurance, you should join Investing Education Academy like yesterday. You can go to IEAnow.com, join. We hope to see you there. So, yep, we'll see you next Wednesday.
Wait, what? One last thing. Remember, if you want our picks, we will be posting our picks over in our Facebook group, our stock picks for today. To find those, just go to Facebook and search Investing Education Academy on Facebook, and our group should pop up, and just join. And it's free to join. So we'll be posting our picks from tonight there, as well as on the membership platform tomorrow morning.
Yep. So for everybody, thank you so much for being with us, and we will see you all next Wednesday. And if you listen to the podcast, please, if you want to find more podcasts like this, you can go to IEApodcast.com. IEApodcast.com. Have a good one.